All right, thanks everyone for coming back for our next edition of Econ Talks. Infometrics Chief Forecaster Gareth Kiernan here with me, Infometrics Senior Economist Brad Olson. Of course, the housing market continues to dominate some of the minds of New Zealanders, as well as where construction is heading as a very core part of the economy. I mean, Gareth, what's your feeling over where things are moving at the moment?
Well, the housing market just continuing to surprise in terms of its strength, really. I mean, we had obviously low sales numbers through lockdown, which not too much of a surprise there. But since then, I mean, we look at the sales numbers for July. That was the strongest month in around about 4 years. And house price inflation right across the country now running at over 9% per annum. And again, that's the fastest rate in 3 years. What's particularly surprising about that, I guess, is the fact that Auckland has really sort of regained some momentum in recent months as well. So, bit of weakness again in prices through the lockdown, but that has pretty quickly been forgotten about, and demand coming through there at the moment.
And of course, look, interest rates are going to be driving a bit of that activity, as well as the likes of the Reserve Bank's stance on mortgage holidays and similar. I mean, those interest rates that last week we had the latest monetary policy statement effectively looking at pushing down mortgage rates. We've already seen one bank go to below 2.5%. I mean, 2% really does have to be the next realistic number that we look for. But in general, those low interest rates will continue to keep prices in a pretty good position, you would have thought.
They help, and obviously you've had demand that's been stimulated as well by more New Zealanders coming back into the country, and those migration flows helping there. And of course, that sort of tends to be spread across the country in terms of where that demand is, as people often head back to the region where they sort of were previously before they left New Zealand in many cases. So quite a bit of demand coming through in that regard. Of course, news over the last week or so as well with the mortgage holiday scheme being extended. So whereas we'd previously looked at September and said, well, you know, the housing market could start to look a little bit dicey after that. If we're pushing that out by another 6 months or so, and the fact that we haven't seen a great number of job losses, I mean, there's been plenty, but certainly not to the extent that we might have thought 3 months ago. There's a whole lot of factors there. Just suggest to us, or suggest to me, that the market is going to keep its momentum for a little bit longer yet, and it could be getting through into the sort of second quarter of next year before we start to see conditions cooling there.
And because that housing market is holding up better, I mean, that's going to have some major ramifications for the likes of the building and construction sector, not only in terms of new building activity, but also generally with lower interest costs and similar. You're likely to just see the total quantum of building works again holding up better than we might have feared in the depths of lockdown.
Yeah, I mean, if we think about alterations and additions work, first off, I mean, the consents there are running around about 15 to 20% down on where they were this time last year. So there is weakness coming through there in those numbers. A little surprising, given a lot of the feedback we've had from clients, is that there's still a heck of a lot of spending going on in that sort of renovation area. DIY work, of course, which doesn't get picked up by the alterations and additions consents. There's a lot of money being spent there. And certainly when we look at the data that's come out of MB, that sort of homeware retailing and hardware retailing, the spend on there has been running pretty consistently since lockdown at around about 20-25% up on where it was this time last year. So there's quite a lot of money sloshing around in that area. Of course, if the housing market is going to maintain its strength as well, particularly in terms of those price rises that we talked about, that's going to feed through probably into more new residential construction activity than we might have anticipated. We know there was work already in the pipeline prior to lockdown, and that's being completed and trying to be caught up. But what is really surprising for me, I think, in the last few months is that consents for new builds have held up really well. If we look at the latest quarter or so, I think consent numbers were almost identical to the same quarter last year. And that's with the fact that processing probably wouldn't have been running at 100% during lockdown. There's no real signs there of the sort of weaker business and consumer confidence impact coming through and hitting the house building market at this stage. And again, right across the country, whether you look at Auckland or in other regions, those numbers have been strong.
And again, I mean, that reinforces this conversation that we keep hearing from clients, from people on the street across the country around the pipeline of work sort of holding up pretty well at the moment. You know, the next 6 to 9 months seem to be all right in terms of builders getting stuff done. Post that, you've got the likes of the government shovel-ready projects that are shovel-ready not now, but soon enough, you'd hope. You know, that they have rolled them out, and it did take them a while, but they seem to have got a lot of spending announcements out now. Those sort of things will reinforce activity, certainly in the near term. I mean, what's the prognosis sort of for the future?
Well, I guess for me, it's a case of look, upward revisions and risks on the upside to the consent numbers that we'd published a month or so ago in terms of our most recent forecasts, where we were expecting things to fall off. We had revised those numbers up even compared to what we were thinking in May. And yeah, I mean, if you look at that mortgage holiday scheme as an example, if you are pushing out the timeline around that for 6 months, it does suggest, given the numbers we've been getting through, that the timeline on any delays for or any downturn in the construction industry could well be through into mid 2021 before those numbers could start weakening substantially. That's a long time away, obviously, compared to what we were previously thinking.
Yeah, of course. And the interesting thing with that mortgage holiday is it means that you really you limit any downside, whereas at the same time those higher interest rates and such sort of push the upside even higher, and so you've sort of got an artificial floor that's been placed under the market to a degree. So look, some really challenging positions ahead. We'll continue to sort of watch where those numbers go, try and understand not only where the housing market's going, but what that means for construction. Obviously, again, like I said, a really core part of New Zealand's economy, and one of the areas that we were fearful would dip away quite quickly, certainly holding up better at the moment. Thanks so much, Gareth. Fantastic to chat again, and we'll do this again soon on our next edition of Econ Talks.